as your business gets bigger and you start buying assets and you start investing in things and you become millions and millions in size, there's complications in the profit calculation. I'm going to walk you through a few definitions so you know what I'm talking about. I learned from Grant early on that if people are confused, then you're going to find failure. If you use words that people don't understand, it becomes distracting and they lose interest. So I want to give you a little bit of when I use some terminology, you'll understand what I'm talking about. But at the end of the day, let me give you an example. If you generate revenue, you spend all your money to generate that revenue, and then whatever's left over is called profit. Now, when you're a small business owner, your profit is what you pay yourself. So it's important to understand that at the end of the day, all businesses will eventually be valued based on their profit. Now, as you build a bigger business, some different terms and conditions come in and different terminologies, because as your business gets bigger and you start buying assets and you start investing in things and you become millions and millions in size, there's complications in the profit calculation. And the reason that is if you're buying equipment and you're buying property and you're investing in certain things, well, those have different treatments with taxes. So what I want to do is walk you through some of the terms that are used that you might hear when you're talking about valuing your business. Wall Street uses a term that's called EBITDA, earnings before interest, taxes, depreciation, and amortization. This is traditionally how businesses, larger businesses, are valued, because you have to adjust for depreciation and amortization, things you invest in, things you buy. You might accelerate. For example, if I'm in the landscaping business and I buy a $1 million tractor trailer setup, I'm going to write that off at the top of my taxes, and I'm going to not pay taxes because I wrote it off. But when I value my business, I still made $1 million had I not chose to buy the tractor and trailer. So you understand there's implications. Now, what I like to refer to when you're a small business, so we're all speaking the same language, is I refer to what you pay yourself as ODE, Owner's Discretionary Earnings. Why do I use that term? I use it because say you have $1 million business and you pay yourself $2 million. That's what you pay yourself in cash. But let's say you mix your business with your pleasure. So when you go to California and you take business meetings, you do it, maybe you stay on the Disneyland property. And so your family's off enjoying Disneyland while you're off having meetings. So you wrote the hotel price off. Well, you'll still look at that as a business owner as a benefit to owning your business. So if you're mixing business and pleasure and you're running expenses through the business, it's still earnings to you if you weren't doing that. And if a buyer came in, you would want to add that back to the benefit of owning the business. Now, another term is gross profit. Gross profit is calculated by subtracting the cost of goods, what you're buying in order to sell. Because in $1 million business, if you're buying $500,000 of stuff that you sell for $1 million, then your gross profit would be $500,000, which then you need to run your business. Your net profit would be after you run your business, what's left over that you can pay yourself. My term for that in small businesses is owner's discretionary earnings. What you pay yourself combined with the benefit of owning a company that you can expense as a cost. Now, how do we determine what those elements are? We look at a profit and loss statement. That's your monthly, quarterly, and annual indication of revenue, gross profit, and ODE, owner's discretionary earnings. Or if you're a large business, your EBITDA, earnings before interest, taxes, and depreciation. Your ODE, owner's discretionary earnings, when you're small, will drive a multiple that you get paid for your business. So I exited my role of operating the day-to-day responsibilities of the company. Now, why would I want to do that with Natalie? Because I want somebody I can trust who can run the company. while I go find new partnerships, new businesses to acquire, and spend time strategically working with my team to build the business to the next level of success. And then we got to leave a little time for Grant Cardone and I to fly around the world and negotiate remarkable things on behalf of our clients and ourselves. If you don't leave that time in the day, you don't have time to negotiate. And let me tell you, when I went on the road to sell my business, it took 15 months. I had to be out of the office. 15 months. And if my business was not continuing to grow while I was not in the office, I would get docked on the multiple they're going to pay me, because they're going to say, you're out of the office and it's declining. What that means is when I'm negotiating the sale, they're going to tell me I got to be at work every day because it's obvious the business can't succeed without me there. So you have to exit your roles, your responsibilities, and what you're doing in order to create massive value, or you get trapped. And this happens all the time. I've bought over 200 businesses. I've done $1 billion in transactions. And anytime I see a business for sale that's contingent on the business owner, the value will always be they have to stay there for 3 to 5 years working for me if I'm going to buy that business. Well, then what is the point of selling the business if you're going to buy basically a 5-year job? So it's very important to understand how this math works and be taught how to maximize the value of your business, your time, your energy, your effort, and multiply your money, which is why we call this the 10x business multiplier. Because to multiply your money, you have to understand how to exit not only your business at the right time for the right and highest value, but all the elements across the spectrum to create massive value so you can have a capital exit.